the good music. What, you don't like this music? All right, we can drop some stuff. Let's drop it. We can go hard in the paint. And obviously, we can also go harder than that. Good morning, everybody. How's everybody doing on this fantastic Tuesday morning? It is the 14th, and today is CPI day. So let's bring up the big bright screens here. Show you what we got going on. We got core inflation in 9 minutes. It's actually a consumer price index, but that's what they're looking at. They want to see a number that is trending lower. If we pull up this tab over here, you can see since the peak in June, 9.1% core, you have been trending lower. Last month was hotter than expected. You can see right there, they were forecasting 6.2. Came in at 6.4, and though the markets took that as bearish, it was still lower than the previous month. All right, still lower. So you have not had a higher reading since you've been trending lower. So I don't know what all the fuss is about out there, but they want to say stickier inflation, and they want to talk about doom and gloom and everything, and let them do it. Right now, they're forecasting 6.0. Where was that at? Where I was just looking at it. I was looking at something, and it said that it had came in at 6.2, but we know that that's not the case because they revised it. No, it came in at 6.2. Never mind, I'm confused. Here we go. So forecast 6.2. This was the last one. You can see they were expecting a larger drop. Well, anyways, 6.4 is what came in. Now we're expecting 6.0. So anything higher than 6.0 on that number would be, bullish for the dollar. That being said, these things aren't really trading correlated right now. Everything is kind of just doing its own thing. The reason for that is the massive capital rotation that we have going into all sorts of assets. We actually finally got the VIX moving. The VIX is very important as it is the options volatility. So when you get a rising VIX, that means premiums on options goes up. So you typically do not want to be a buyer of option premium when you're above 50%. And on most stocks right now, you have a higher number or you're higher on the volatility than 50%. So I wouldn't be really trying to buy premium. If you do believe that this is going to continue to roll over or whatever, regular indices being the S&P 500, NASDAQ, Dow Jones, and Dow Jones, IWM, that stuff, then naturally you would want to see a pullback on volatility to bring the premium down a little bit. Then look to be a buyer on some puts. But I wouldn't be looking to buy puts, guys. I would not be looking to buy puts because you've already had a substantial move lower. I mean, let's be honest. Since the midpoint of last month, February, that's the only direction you've been going with 1 or 2 days of pullback. So typically you would be selling or you would be buying puts expecting a down move right into massive support. Let me see here. So right there is the yearly open for 2023. And that's relevant because as long as you're above that, you're bullish on the year. I mean, and that's your trend. So you've got a bear market low down here. A lot of people thought that this was finally breaking down. A lot of people are still bearish. You can see that in this short squeeze that we got on Bitcoin the last 2 days. That is nothing more than a short squeeze. Everybody was selling this thing, assuming it was over because you got the bank problem. The bank problem doesn't affect Bitcoin as we've seen yesterday and a couple days. So Bitcoin, extremely volatile right now, going from one end of the extreme to the other in a period of just 3 short days. All right. Be very careful out there. Make sure your risk is mitigated. You are coming into daily resistance right now on Bitcoin. That price is 24,844 on the Coinbase data feed. All right. It's very important that you are trading on the same data feed that you are charting simply because of the spread. Once the SIN network went down, you're going to see that Bitcoin now will vary in price from exchange to exchange. There was one point over the weekend where you had almost $1,000 difference between spot and perps. So just be very, very careful, right? Just because you have Bitcoin trading up on Coinbase does not mean that you're going to see that same move on Bitget or Bitget or whatever other exchange you trade on. So my opinion as to what we're probably going to be doing here today is we're going to wait on a run on the high of the day. And I would love to see us get above 25,288. That would throw a pretty massive spike, I think. But then that would be a selling opportunity as you are in the upper edge of the Bollinger Bands, which is a 2 standard deviation move from one end to the other. However, you can see that the bands did in fact open up before you even got that expansion. So it's probably closer to a 2.5 or 3 standard deviation move. So be very careful. Let's pull up some of this. I realize we got 2 minutes, but here you go. So this is the estimated leverage. You can see a massive drop off there. Boom, right as prices, the white line, started to go up. So lot of levered shorts. Big spike lower. We still haven't even gotten all the data on Glassnode yet for how many shorts were liquidated. But where we stand currently is not as much as you liquidated to the bullish side when you had this move lower. All right. So we got 2 minutes here. 2 minutes. A lot of people trying to pick the top of this move. They have already been stopped out. You've already made a fresh daily high. So you don't necessarily have to make a fresh daily high and then roll over. So I leave it up to you where you put your risk. If you want to chance it now, your profit target would be here at 24,349 if you were to take the short right now. Your risk would be there. There it is, 830. I don't have the number. Let's see if we got the number. Oh, that's going to be way lower. No, it came in line. All right, so there is the move higher. Now you want to take that short position. And you would want to use the high of day here. Let me see. We didn't get to where I wanted to see it get, so hang on a second. That upper white line is the area that I want to see it get to. I got confused there. The 25,288 level is the level that I want to see liquidated, as that would be the top of the range. That would be a fresh yearly high on Bitcoin. Then we can look for that pullback. Apologies. So here we go, coming up to it. There you go, fresh yearly high. Wait for the spike. Is there going to be one? Yes, there is. All right, so now I am going to take that and see what happens here. All right. Good morning, my love. So I'm going to mark that at 255 2.44. That's going to change to take profit, obviously, because I got confused. I was looking at daily res. I wanted to see a new high on the year before the pullback. So current entry 25,382, which you can see a lot of volatility around that area. If we make a fresh daily high, I will be stopped out. 25,567 on Coinbase. On Bitget, it's going to be 25,524. Let me put that stop loss in. 25,524. Confirm. And there we have it. Just looking for a 1 to 2. So if I can get prices back down to the, at least in this area right in here, I will start to take profits. So previous high of day, excuse me, if we can get down to the previous high of day. All right, anyway, sorry about that. So yeah, let's see what happens here. I mean, it's not a bearish number. It came in line with expectations, right? They wanted 6.0, they got 6.0. So it's trending lower still. That is lower than last month. But the reason we're taking profits is because of the just sheer or the reason why we're wanting to take a short scalp is just based on the sheer volatility that we had to the upside. I mean, naturally, it's not always going to work, but typically that's the direction you want to look to shoot for. As everybody was probably shorting the high of day, not realizing that the liquidations, true short liquidations, would come from over here. And this is the top of the Bollinger Bands. So this is usually a profit-taking area. I'm sitting at about a 1 to 1 right now, since we're not getting that volatile push lower. I'm probably going to go ahead and take some profits, so that way I can minimize the amount of risk that I have on the table, as it is pretty close to a 2 to 1 right now. So I'm going to go ahead and take profit to 5060. And I'm going to take 70% and close that position. Never mind, it is already moved much lower. Current price 24,917. So let me adjust that. 24,9. Now it's 7. So 24,7. Let's go 24,8. It won't chill. 24,8. 850. Let's see if we can get filled at 24,850 on a take profit, as that'd be a decent damn trade. And I will move it up even if I have to. I mean, I'm just that's almost a 4 to 1 what I'm looking at there, and I do want to get filled because these short squeezes can go for days. 24,928. And it's about getting my risk off of the table. That's what it's about. Period. I want my risk off the table. I should have already had a limit sell. I should have already had a limit buy setting down there, as that's what I try to tell you guys to do. Always go into the market with your stop loss and take profit ready to go, especially when trading these volatility. But it's been such a good week. Like, I really didn't even care if I even traded today. I mean, nailed that move yesterday. It was a beautiful trade. And we're going to get filled here, hopefully, on this move lower. I'm on. Fill me. I moved it to just straight 25K. That with 50x leverage, that's a 60% return on the equity in the account. So not gonna complain about that. And there it is. I am out. Boom. All right. There it is. One and done. Yeah. There you go. One and done. The short entry, original short entry, 25,382. Obviously, I did not get top ticked on that. Let me see what the high is on the Bitget chart. The high is 25,532 on that wick. And the high on this is 25,550. That's what? $12. I mean, sorry, $18 worth of difference there. So there's no point in splitting hairs over $18, not on a 5-digit asset. So yeah, take profits, guys, because like I said, this thing can absolutely continue to squeeze higher, right? The shorts have been on the wrong side of the trade since this thing bottomed. 19.7-ish. That was a very volatile move up. Yesterday, my entry, let me pull up the other account. Yesterday's entry was 22,341. So that's right here. Right there. We were watching hourly support, intraday support. This is the price that we were watching. Let me close this damn Bollinger Band. It's annoying. So this is the area we were looking for support to hold. It did here, but I missed the entry here, which is why I got filled up here at 22.3. Well, I'm sorry, 23.3. Much higher. No, 22.3. Yeah, I got filled at 22,341. So right in here. It's an old support. So if this was support, you broke down. That's where my entry was. I'll go back to the 5-minute and you can see that retest right there. So we broke out There was the first retest right there. So essentially, I was just watching this, and then it got pretty volatile, moving away from the area. So I just went ahead and took the long entry on that first 5-minute pullback candle. So getting back over here to the current short trade that we have, if you moved your stop to break even, which I am going to, that means you're going to lose any unrealized P&L that you did not take on this wick lower. That's why it's so crucial that you take profits when you get the move that you want to see, right? Because we don't know what the market's going to do. But if you got filled right there, which is where I got filled on a short trade, a move down to there is a much better than 2-to-1 risk to reward. And just on the volatility sake alone, we could expect that, right? Right there is a 2-to-1 risk to reward. Take it down to 25, which is actually where I closed the position. You can see it's a 3.3-to-1 risk to reward. So if price stops me out, which it looks like it's about to here, as you know, inflation is trending lower, that's typically bullish for riskier assets. You could see bullish continuation today. If you missed the trade, have no fear, because 9:30, there we go, I was officially stopped out. So there we go. Boom, boom. With once they got their fees and everything, it was a 56% win. 56% win on the day. Just absolutely crazy volatility. This is why people trade crypto, right? This is why people are so, yeah, it's because of that. There's not many, other than trading options, there's not much stuff out there that you can trade and literally almost double your account. That was with 50x leverage, though, also. So I paid a lot of fees. I don't expect you guys to use that much leverage. I don't expect you guys to use any leverage until you understand how to even do this, right? You got to know what you're doing before you apply any of your risk, actual risk, into the marketplace. You need to know how to put orders in and things like that. But we'll see if the market takes that as good news or bad news today. As of right now, it looks like it wants to take it as good news. The reason that you had a continued melt off in these things yesterday is because they have banks in them, right? The IWM got hit the hardest because it has the most amount of banks in it. That's why it got hit the hardest. If we pull this up on a daily, you'll see just how bad this thing got creamed. But a lot of people are going to buy the banks. That's going to be a buying opportunity for a lot of people. Let's go to the daily time frame real quick as we wait. Bitcoin just making fresh daily high after fresh daily high, baby. 25,833, 25,844. Remember, I'm still long on the USDC side of the platform as well as the coin M futures or the inverse swap contract. The inverse swap contract is long from 16,530. 16,530 is where we took that entry. So as far as I'm concerned, Bitcoin can go all the way back to where it used to be up in the 50s. That would be fantastic. My girl's probably got her phone open right now looking at it and going, woohoo! I love you, baby. Her account's looking good, in other words. Yeah, so that's what we're doing. That's what we're looking at. That's why I like using Bitget, man, because you got those three different futures. You can offset risk. There's just so many things you can do with that versatility. Absolutely love it. I can trade to the upside, I can trade to the downside. Then once I have a significant amount of USDC or USDT built up, I can turn that into Bitcoin. Meanwhile, not risking a single penny of my hard traded money. Month over month came in a little hot, and it did not go down from last month. I'm sorry? Core did. Yes, it did. I'm looking at it, bro. Right? It did not come in a little hot. This number came in a little hot. Right there. I'm talking about this one. That's the main one. That's the one that the Fed have their eyes on. Obviously, the Fed are watching all of it, right? All of it. But that is the tool to which they are using to measure overall inflation. This is where they want it. They have a 2% target right there. It is lower than last month, and you have been trending lower. Boom, 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 boom. So we want that trend to continue. That's why they're hiking interest rates, to get this number down. And now that we finally got an uptick in unemployment, that means the Fed, they can potentially start to ease up on the hiking cycle, which we already know now based on what happened over the weekend that they're probably going to stay the course, but they're definitely getting closer and closer to a pause than they are, going much higher. So a 25 basis point rate hike. As of yesterday, this was a zero. No hikes was up to 26%. You can see that already today, based on the news that we've gotten yesterday, has increased the probabilities that they're still going to rate hike 25 basis points because they still have a target range of a little bit above 5, right? They want this number to be 550, somewhere in there, as they think that's the sweet spot. The market was pricing in something a little bit different than that. So yeah, you can see the epic change here. Let me show you. Let's get rid of this because not going to post it. Where are we at? Where are we at? Right here. See that? 73% chance that they were going to hike 25 basis points, and there was a 26% chance that they were going to do nothing. That was before the Fed came out and said, well, the Fed hasn't really said much, but the president and then Mrs. Yellen said, we're going to fix it. So now the Fed Watch tool has dropped that percent chance of them not hiking. So they're going to continue to hike more than likely. So this move can be faded on the open. Look at that beautifulness right there. Fresh monthly highs. Yeah, baby. And that was after this liquidation. So big, beautiful engulfing on the month. There's 17 days left on this candle, so anything can happen. This thing could turn right back and roll over and make fresh yearly lows, is how volatile it is, right? Just because you're going up now does not mean that it's going to continue to go up. We think the low is in, and based on last week's close above the 21, we maintain that bias. This was what we were watching right here. We wanted to see how this candle closed in regards to this 21 right there. As long as we were above that, we maintained our bullish bias. Below that, then you got something different occurring. As this thing does a pretty damn good job of showing you the trend, right? That's what people have been ignoring. Just a simple tool like the 21. Moving averages are obvious, they're trending tools. They show you the direction of the trend. So, for you to say that you're in a bear market when you're green on the year and you are trending to the upside on a higher time frame moving average, that is your near-term trend. So you typically are looking to buy dips. This is a dip until you start closing below and start making lower closes. Then you start to sell rips. But as long as price is under this, you're a seller. Above it, you're a buyer. It's that simple. Or it's supposed to be, but people listen too much to Twitter and all that. So, man, that is beautiful. Fresh monthly highs. Absolutely beautiful. Keep going, bitty boy. Squeeze them shorts out. So what I was going to say is at 9:30, obviously, a lot of this can be faded. So don't get too bullish up here. You are very stretched out. If we pull up our volatility indicator here, you can see that you traded to the low end of volatility. This is a mean reversion tool. That's all it is. It shows you the mean and when you get an expansion in volatility. So we got the expansion in volatility. That's when the bands are spreading out, dropped down well below it, and now you're trading well above it. So this isn't really the time to be a buyer. You buy dips and uptrends. You sell rips and downtrends. According to this thing, you're clearly up. You're even hitting the outer boundaries all the way up to the 8-hour. On the daily, you pulled back to the midpoint of the volatility range, which is where the buyers stepped right back up again. And you can give me all the reasons you want as to why it's going up. Technical analysis does not predict direction. What it does, though, is it helps us to generate bias, directional bias, and it helps us to identify areas that we call like value areas, where we want to be buyers or where do we want to be sellers. A lot of people is going to be taking profits into this move, right? I take profits, $200. Nice work. Mr. Johan, I think you're done for the day. I think I read in the Discord that you've already taken 6 trades today alone. You got to be careful when you should be looking for one and done. One and done. As to not give away your P&L to fees. Fees. These crypto exchanges have fee structure. Man, that's a nice daily candle. Looks like almost a legit breakout too, seeing how you've got your midpoint right there. World's deepest voice. I can make it much deeper as well. I am Optimus Prime. What was the CPI number? It was 6.0. That was what was forecasted. They were expecting 6.0. 6.4 was the previous months. So it's lower than that, right? Lower is what we want. Lower is what the Fed wants. Lower is what everybody wants. Everybody wants lower inflation. All right. But this number came in a little bit higher. So core CPI month over month, this number did come in higher. So they want this number lower too, but the other one is the main number that people are looking at. Higher than expected should be taken as a positive or bullish for the USD. Let's see what the dollar is doing today, because yesterday, we've seen the dollar trading up. We've seen it trading down. The dollar is bouncing off the yearly opening range. If we use this tick, if we use the open of that candle, you closed under your yearly opening range yesterday. So even though people have been bullish the dollar for the last 2 months, we have an overall bearish bias on the dollar. We've been short the dollar since up there, 113,920. So we were waiting for this thing to find resistance. It did make a fresh yearly high and then rolled over, which is beautiful. Absolutely beautiful. But setting in a range, you're basically trading in a range. Bitcoin up 8%. That's a short squeeze. I would not be surprised to see this thing sell off at the open. What a move, man. 3-day move is insane. What's bonds doing on the 2-year? Pulling back a little bit. Pulling back a little bit. I mean, that's pretty nasty. That's a sudden rush to bonds. A sudden rush into bonds. But, I mean, back in February, I told you, if you wanted to buy bonds, this will be on the watch list for the next couple weeks. And then last week, we got this move right there. Look where it is. It's up here now. Yeah, you would have sat in a little bit of pain there for a few days. But I said next couple weeks, right? Couple weeks. So there's your couple weeks up. Boom, boom. People were running into bonds. I told you guys that last month. The 30-year. Look at this. That's the 30-year. My goodness. My goodness. We've seen some big moves lately. A lot of volatility. Volatility is good for us. Hit 9% on the day. Straight up, baby. Straight up. 26.5. What's up, everybody? What's up, Jay Bradley? Month over month came in a little hot. Did not go down from last month. The one number. New 2023 high. Yep. Bless. You're all right, bro. Film Garden, you don't have to apologize, my friend. You are right. You are right. It's just not the main number. The central planners deciding to give these banks a bailout is what caused this bullish move. How would any amount of TA indicate that would happen? Zero. Absolutely zero, Victor. You are correct. That's why I was laughing at all the bears the other day when they were like, don't you remember the 250 death cross on the weekly? You know what I'm saying? It's like, no, dude, the reason it's selling off isn't because of that. It's selling off due to what's happening with the banks. Remember, Bitcoin last week was getting killed. Remember? Last week you were getting absolutely wrecked. There's your weekly low. That's on Friday. Today's Tuesday. On Friday, the Bears were so much in control. They were loving life, bringing up their little fractals and talking about their technical analysis. How that's why. No. So there's no amount of technical analysis could have predicted this move to the upside. We don't use technical analysis to do that. We use technical analysis to identify areas when and where to apply risk. That is it. The market's going to do what the market's going to do. Technical analysis is not going to predict the move. It never does. It's about statistics and probabilities. That's it. No amount of technical analysis in the world would have told you to buy here because in 3 days you're going to be trading at $26,000. None. But if you know what you're doing with technical analysis, you can buy support, can't you? Yeah, you can. And since you're tuned into this channel, you know where support is. Always. Right? You know where support is. Here. Right? So you know what areas to watch if you want to be a buyer. That's what it does. That's what technical analysis gives you. And it's invaluable, in my opinion, because it's the only thing I use in my analysis. And I do this day in and day out, every single day, Monday through Friday. You can find me sitting right here in this chair, the throne of swamp ass. Occasionally I stand because my desk is a standing or sitting desk converter. Conversion, converter, convert, whatever. You got my drift, right? But anyways, we have finally gotten above that area. So not a bad move from where we bought it down there at 16,530. Right? We did pretty much tell everybody on the last day of December that we were going to be buying on the first day of January. We did. Now we're sitting $10,000 higher. Could I have predicted that? No, I could not. Thank you. But, it's a good place to be a buyer. Was a good place to be a buyer. I don't think you're going to get another chance to buy down there either. Not anytime soon, anyways. We post a lot of useful info on this channel. Yeah, I'm done. No, I'm done with the coffee. A lot of useful info. But yeah, that's the monthly. This is the quarterly chart. That's the monthly level that we were watching, but we also had another level that we were going to allow the market to pull back to, as that would have been quarterly demand, right? Quarterly demand. You can see you damn near got to it. Almost got the quarterly demand. As long as you're above that, you looked good. That weekly close was phenomenal. And then you're getting this. So yeah, who cares why it's moving up so rapidly? We positioned ourselves for it to go up. The beautiful part about day trading is you can make intraday money as well on the intraday volatility. And we know when that volatility occurs. We don't want to be traders in any of this garbage. We want to be looking for entries when we get the expansions. And we know there's a high probable chance that the expansions are going to happen during the New York session. And that's when you get it. Your expansion occurs at the New York session. Boom, boom. Yesterday. My target yesterday was the daily high. So it didn't have far to go. Anything on top of that is just icing on the cake. You've been with me for a while, if you're the same, Victor. Do you have an opinion on USDC breaking, then coming right back to peg? My mind isn't. That's because they guaranteed everybody's money. So basically, Circle had money at that bank, right? $480 million. FDIC is only good for a quarter of a mil. So 256 or 250K is typically what the what the FDIC is good for. But when Janet Yellen came out and said that they were going to guarantee you every bit of your money back, no matter what, then that means Circle was going to get their money back, right? Their $480 million. So that slight depeg was based on that. Once people realized that they were going to get their money back, then you can see that it went right back to the peg, or pretty close to the peg. I don't know where it's trading currently. I don't trade it, but yeah, on Gemini, you're right back to the peg. So this volatility was due specifically to that, because 408. If you've lost $480 million, that's $500 million. Then that means your asset is essentially illiquid, right? You can't meet your customer's demand. So it began a big sell-off. But then she came out and saved the day, and now it's right back. But until they get the SEN network back on, SEN, you're still going to have crazy, ugly price action on the weekends and on the weekends. The SIN network was so vital for Bitcoin's 24/7 trading. Now that that is off, it's going to make price action wonky, and technical analysis isn't going to be as useful during normal trading hours. It will be, i.e., normal banking hours, but so weekend trading is probably until another company comes out with a SIN network or something similar to it, it's probably going to be best to avoid it trading on the weekend. Here we are 15 minutes from the open. Been a good couple days. I don't know. I was going to do corned beef today, but maybe we do fish and lobster instead. No, I'm still going to do the corned beef. What's up, Optimus Fute Ledge? You guys are the Fute Ledges. Need to sign up to the Patreon and start my learning journey ASAP. I can help you, Mr. Byron. I can't make you profitable, but I can definitely help you identify objective support and resistance. That's crucial. It's objective. I teach people how to use objective analysis because there's too much analysis out there that is so subjective. And if it's subjective to begin with, then how can you be consistent with a subjective analysis? In order to be consistently profitable, you must first become consistent. The way to become consistent is to use objective analysis. That's all I guarantee. Bitcoin getting a nice pullback here. That's a pretty decent sized pullback. I know people are licking their chops to short this thing. I would still wait until the open if you are looking for shorts. S&P 500 is up 1.1% on the day. The Dow Jones is up 0.7% on the day, and the US 100 up 1.0% on the day. So depending on what the banks do today, I think will dictate what we see on SPX. Also, same day expiring options have played a massive role in the price action that we've been seeing for the last few weeks. That is not retail trading, 0-day option expiries. It is 100% being done by firms. Retail cannot move the kind of volumes that we are seeing inside of 0-day expiry options. But that was also keeping volatility low. But then we got that explosion in volatility. So a lot of people were concerned about a delta squeeze. I think you can forget about the delta squeeze now, in my opinion. You can see USD JPY had a massive down day yesterday. Today, it's up pretty big. But this is the asset of which I am short the dollar. Short it from up there. So obviously I want to see this trend continue lower. This is the beginning of what looks like potential for that to be exactly what is happening, but naturally I want to see a weekly close under this. As long as it's closing weeklies above that, then I will probably have to adjust this short position. But as long as we're closing weeklies under it, see, I don't have to panic because I'm in such high profit on the trade. All I have to do is wait to see how things shake out. And since I've been doing this for so long, I know occasionally it can take 3-4 weeks for the actual move to reveal itself. And that's exactly what's happened here. Today's Tuesday, so hopefully this thing finds resistance pretty damn soon again and starts to roll back over. Got it. All right, perfect. What does it mean when the POC is far away from price and not much volume up here? Nothing really. Let me get it over here on Bitcoin. So the point of control just shows you where the majority or the bulk of volume traded that day. So, like, when you see the point of control in the middle of the range, it makes it a little bit more difficult in trying to figure out which direction the market's going to go. But typically when you see it like this, when it's like at the top of the range and then price starts to really fall out and start making fresh daily lows, that, one can infer that there was a lot of selling or more selling than buying going on there because obviously price fell away from it. But here you have 2 days where the point of control was, basically at the top, right? So this implies that you have more selling going on than buying. So when price gets well above it, anybody that's short based on that indicator means they're underwater and they have to close those shorts. And you get rips like that. The fact that, sometimes you got low volume areas, it doesn't really matter on price. We don't use this tool to give us a definitive bias. We use it to help our daily analysis. That's all. Like, I want to know where it is before I take a position, so to speak. Like on this, it looks as if though people were buying support today. Right? That would have been support based on the way we do our analysis. That is intraday support. This is what we call a trap. When you break down below support and then a next candle or two later, you take out the high of that candle. That pretty much shows you that, this was just a fake move to the downside. So these candles are good areas to watch. Like for entries, longer term entries. So like essentially, if you thought that was going to be a trap based on where the point of control was at support. Yesterday's point of control was here too, which that would probably, in my opinion, be more profit taking than actual new positions being put on. But nonetheless, price is trading above both points of control for both days and you're trending up. You definitely want to be looking to the buy side. And still, sometimes you're going to get robbed. But if you would have just simply bought once this candle took out that high and used that candle's low as your stop loss, this is your daily high. So that's a 2-to-1 risk to reward. Right? That's if you just use trap analysis. Trap analysis doesn't work out as good on the intraday as it does on the dailies, but you can see 2.51 risk to reward. The London session called the low of day. And now you got your expansion. So this one candle was a trap. I don't know if I answered your question, but just because you don't like, and also something to keep in mind about your points of control intraday is they will fluctuate. They will shift. They will move. Like, since a lot of people are taking profits up in here, by the end of the day, if it just trades choppy and sideways up here, this will migrate to up there more than likely. In fact, I would almost bet you that's what happened yesterday. I would be willing to bet that the point of control yesterday was at 22,535, and then by the end of the day, it closed out up here based on profit taking and, people trying to short the top. And you also have retail that buys the top. You have a lot of people that buy the top looking for continuation, right? It's called FOMO. They missed all of this, so they see these big candles and they're like, I'm going to get long here because price is going to continue up. There's your open. You do have so far an objective resistance potential right there. Intraday. Let's see if we can find a higher one. Yeah, on the 15-minute, you got one up there, but let's see how this plays out. So one could sell there, put your stop up there, and then your profit target would be down here. So if you were assuming that this is going to be faded the entire move, that's a wide stop. I wouldn't do it myself because the day's just getting started. And we know that shorts are getting squeezed. Short liquidations. Right? We don't even have all the data yet. This thing is still just going up. And short squeezes can last for a few days. You do got a slight volume pop here. So you can start watching closes. Do you continue to make higher closes? Or do you start making lower closes? On the 5-minute time frame, there's really nothing one could say other than potentially watch this area there. So you'd be looking to take a short entry right in here. and then your stop would be high of day. But since the market just now opened, I would probably give it 10 or 15 minutes because I can see the next, 2 or 3 candles trading right back up there, running that high, and then ultimately rolling over. It's impossible to know what is going to happen. If I knew what was going to happen, I would tell you exactly where to put your stops, exactly where to take your entries, and exactly where to take profits. But I don't know what price is going to do. I just know that for the last 3 days, this thing has been on an unimaginable rip your face off rally, and I am expecting a pullback one of these days. So if you are shorting it, you're shorting it based solely on the fact that you think it's going to pull back. You're just looking for the pull back. So like if I was going to short this, my setup would look something like this, as that's an old resistance, and then I would target right there. So that's similar to what my setup would look like if indeed I had a short bias. I already made money to the downside once today. Here, I sold there, I took profits there. So do I want to take another short position when clearly price is trending up? Not really. Not really at all. But if I was going to, that's the position I would be looking to take. Secondly, I would want there to be an objective higher time frame level here. Currently, we do have one. You have that weekly high or that week's open. So we do have an objective level here. It's an old support, old weekly support. So that could justify a short entry. But like I said, you are definitely going against the trend. Definitely going against the trend. The VIX is open and it's heading lower. Let's get the S&P 500 back up there. So this is still trending higher. Now, Bitcoin and risk have not been correlated. So I'm not looking at this expecting whatever this does to happen the same way over here. That has not been the case for a while. Bitcoin has been trading on its own merit. It's been doing its own thing, in other words. If you were to close a 5-minute candle above this 5-minute candle here, I would be more worrisome about the short working out. But if it continues to reject from this area, or at the very least there, then you can justify a 2-to-1 risk to reward. right there would be 2-to-1 risk to reward. So you could literally get that really quick, right? It could come in the snap of a finger if it works. You'd be in there and out. But I would want to see immediate, like just a tag and then roll over, and I would want to see another big candle like that. Otherwise, I would be a little bit hesitant about holding the short position. Each time you take an entry, keep in mind you are being charged a fee. So just by entering the trade, you're already at a loss on the P&L. So like on Bitget, you're already above it. You're already above this. That's about where I would be looking for entry. Or like I said, the bottom of that 5-minute candle right there. If it gets there, but I wouldn't want to see it even get there. I'd want to see it roll over here. S&P 500 making a fresh daily high. You're 10 minutes into the open. And the only reason that you could justify it, like I said, is based on that higher time frame level. Profit taking. Is it enough to get this thing to pull back to there? Probably, right? It could be. But that's a decision you have to make. And then you also have to live with it if you're wrong. I'm just glancing over the questions real quick. Let me see here. What's going on here? I'm not understanding the glee, and I'm happy that so many of you bought between 19 and 20, but it was suggested we hold off on doing anything, so I didn't buy. Yeah. Well, obviously I'm always gonna lean to the fact that it's your money, right? It's your money. There was no clear edge. There is no clear edge right now with everything going on in the market. I'm more happy for the $16,000 buy than I am anything else. Yesterday it was just on a day trading account. That's small money. That's very small in comparison to what I have setting down at 16,000. When I say we, I mean me. You're right. I should say me, not we. Because I didn't tell anybody to do anything this weekend. This weekend, I told people that they needed to be very, very careful for the next few days because at that point, Yellen had not come out and made the speech or the announcement. So we were still in the dark. The getting long yesterday was different. We had gotten that news. We got a bullish bounce off of Bitcoin. Sunday's close was very bullish. You see what I'm saying? That was all different. We knew they were going to. But you're right. I shouldn't say we, I should say me. I'm not a signal provider. I just sometimes will do these streams to help people see what it is that I'm doing on a day-to-day basis, show you the levels, explain why that level, why this level, things like that. I don't want to see it. I don't want to see you guys lose money. And the reality is most people do lose money. While you did miss out on a big move, you know what I mean? And it's difficult to position yourself on Bitcoin when it doesn't show clear support, which it did not these last few days, right? You did not. You took out support. So if you would have bought there, you got stopped out. That's just the reality of trading. If you bought that close, you got stopped out again. Another reality of trading. However, if you would have bought that close, depending on where your stop was, things would look much different for you. Intraday, that's a choppy mess. Up there, however, it is not so choppy. And you know how to identify support, man. My brother, right? You've been with me for a long time. Look at that entry. If you wanted to be bullish. But here's another thing. You're not just following me either, are you? You're probably following Chico Crypto and a bunch of other people on YouTube and on Twitter. So you're giving yourself mixed messages just by doing that. And I know you're not attacking me. So you guys leave. Yeah, don't be beating up on him. He's making a very valid point. Very valid point. But this morning's trade was clear. This white line, I want to see a liquidation above that. Then I'm going to take a short. Then I'm going to use the high of day to mark that. And then I'm going to take profits on a move lower. Boom, boom. It was done in 10 minutes. The trade was over. This trade right here, I don't know if it's going to work. I never know if any trade is going to work. Ever. So I can't really tell you to position yourself anywhere. But I can teach you the concepts. Then it's up to you to position yourself how you see fit. So that way when you lose money, you can't blame me for it. And secondly, when you make money, you can't thank me for it because you did it, not me. You. So here we are. We're still watching this here. Remember, 5-minute closes higher start to make us a little bit more concerned for the trade working out. You're making higher highs on the SPY. Each 5-minute candle so far has made a higher high, higher high, higher high, higher high. So that is a possibility on Bitcoin. But Bitcoin has had a massive move for the last 3 days to the upside. You can clearly see there what level I'm looking at. I'm looking at that 5-minute closure. I don't want to see anything close above it. This one here. Entry is pretty much 26,186. Stop is high of day. Take profit is 25,417. If you enter this short position and you lose money, my bad. If you make money, my bad. I don't know what else to say. There is a level up there. It's a big one. It's a weekly close. Those are areas that we know market participants watch. They will take positions there. Whether it's the right side or the wrong side, we don't know. We won't know until it either works or it doesn't. The edge is, listen, I've said it a million times also, I would rather take 0 trades and go into the week neutral than take 1 trade and lose money and go into the week red. I do not like closing out red weeks. I despise it. That's the way you need to be. Don't look at this as a missed opportunity, because there's opportunities like this every single day. My strategy is designed to find a small area and apply an entry there and try to extract a tiny bit of profits out of it and then be done for the day and move on. If you do get a massive continuation move out of it, well, that's just icing on the cake. But we don't look for continuation. We don't expect continuation because it rarely happens. Most of the time, the market chops. I got you. For love club, I got you. I'm trying to help, and I'll continue to try to help. I want you to be able to get this stuff. Obviously, I want every single person that follows me, that subscribed to me, whatever, especially if you are a paying member or in the Discord. I want you guys to make money. The reality is it's impossible for me to guarantee, because I just don't know what price is ever going to do. For those of us who do not hold spot and buy low to sell high, I now missed an epic move. It's frustrating. It is frustrating. I listen to the fear instead of following my plan. At no point in any of this, even after being told we would be told where to jump in, we told. No, I did not tell you to jump in. Yesterday, where I took that entry was based off of a 5 minute level. You're never going to hear me tell you to jump into a trade. Ever. In fact, I often will give you the bullish case and the bearish case. I allow you to make that decision. I have to. It protects me. Not everybody has the same biases because people are following other people and getting other information. And yeah, you know how it is, man. Everybody's trying to make money in these markets. And like I said, in reality, very few actually do. But it is possible to do it, right? It is very possible. You watch me do it consistently, almost on a daily basis. For anybody that did take that short trade that you're looking at on the lower right hand side of the screen, you make damn sure you take profits right there. If it gets there, do not be greedy. Do not be greedy. Secondly, you definitely want to see a 5 minute close under this one. If you do not get that, you are not safe. Which, as long as you have risk in the markets, you're never safe. You are never safe. But just to it's moved so far, so quickly. That's a 2% move right there. Almost a 3% move. So that's a big move. If it gets there. Price is very volatile. On the Bitget platform, you did not make a lower 5 minute close. You did on the Coinbase platform, but you did not on the Bitget platform. So just protect yourselves at all costs. Protect yourselves. Technically, what I would want to see here is I would want to see this thing break down, start to break down pretty soon. Because even though you got this going on right here, this is a big expansion candle. So people are going to be buying this dip because they missed out. Also, you have risk moving up on the day because it's a good CPI number. So this price over here is what, 25,418. So I would argue you could move that up just a little bit higher before the midpoint of this candle. That's the old high also. People will be looking to buy the old high. You see what I'm saying? This stuff over here, that's your liquidation point. So you want to have that take profit well above that. But nothing too frightening now, right yet. But we know this thing can move, and it can move quick. There is no other random news that I see here in the next 10, 15 minutes. So hopefully it plays out in the next 10 or 15 minutes. Would love to see it just drop now, obviously. We don't need Bitcoin on the hourly. We can put Bitcoin on the hourly up here. Since we got this one on the 5-minute, we'll throw that one on the hourly. Over here we'll put the NASDAQ. Dow is barely up. So the Dow is just chopping. You got a new hourly candle. So now you got a potential resistance level to watch, but that's going to be on hourly closing bases. Obviously, an hourly close above that, then you're probably going to get stopped out. It's a big figure number, 26K. It's a good number for people to take profits. We get more profit taking happening than buying, then this is a target that I do believe is achievable. I just never like taking the opposite side of the trade. Um, he can't give you calls. Yeah, Four Love Club is in the Patreon. I didn't know. Euro CAD low of day. Euro Aussie heading towards the low of day. All right. Saying we or me is fine. Dude is upsetting Mr. Pump. Live and learn. Catch the next one. Yeah, there will be plenty of opportunities. He knows. It's all good, man. Trading is a frustrating game sometimes. I get frustrated sometimes. I know I have, quite a few people that are waiting for me to make calls, the occasional call, right? They want me to because they want to be able to do it too. But the reality is it's more about learning the process than it is about taking actual calls that I make. And doing it live also in front of an audience puts a lot of pressure on anybody. There's 69 people currently watching this live stream. So 69 people are going to watch this trade setup either make it or break it. It's either going to work or it's not. And they probably missed the one that worked. The one that I already took and am already out of, right? I wish I knew that those big pumps were coming and when they were coming. I would definitely tell you, man. It would be fantastic. We filling the CME gap at 28K. It's a potential. I mean, it's up there. There's another one up there. It's at like 35K. I got you, man. I know it's frustrating. You can take it out on me. I don't mind it. I got thick skin. It's very frustrating. You're not the only one that gets frustrated. Others get frustrated too. People come and go. Some people get so frustrated they leave. It's just, it takes time to learn it. And even then, I mean, it's still difficult. But you basically know what we're looking for most of the time. But like I said, at the same time, I don't want to make the call because if I'm wrong, then it's going to be directly my fault why you lost money. That's also why I don't have a signal service. One could arguably blame me for causing the pump because of the $4 billion that I bought worth of Bitcoin. Wouldn't that be sweet? All right, guys, I'm about to buy $6 billion, but I believe that's illegal. And that's definitely tough. Some people can't short, right? Some people don't have access to futures accounts to allow them to even go short. For the U.S. citizens, it's different. It's difficult because we don't have any exchanges that basically allow it. Kraken will, but you got to have such a massive size of money to stake or whatever before they'll allow you to do it. Which I can't really say that. It's been a long time since I've traded on Kraken. I don't know what their rules are anymore. The volatility is definitely slowing down, though, that's for sure. But even though it doesn't look like it, that's like I said, that's from entry to here is a 3% move. That's a pretty big move, especially seeing how, I mean, that would be half of the size of the move that you've seen today almost. It could be something that ends up working and it could not be. If it starts to chop sideways or whatnot, I would bounce. I would bail. I wouldn't even give it a chance to stop me out. But when you do that, sometimes it's gonna go as soon as you close your position, the very next 5 minute candle is gonna like drop right off the face of planet Earth. It happens to me all the time. I get into a position and then I can't watch it because my cat's going crazy or whatever. So I get up to go deal with him, close the position down, and then come back to the desk and realize that had I just left the position open, just do a stop loss there, I would have been fine. It ain't just you, it's everybody. We try to take as systematic approach as possible. That way we're not worried about it. That way emotions don't get involved. But when money's involved, emotions are always going to be involved, especially when you're trying to learn how to do it. I'd say as far as the trading style that eliminates most emotions would be delta neutral positions, selling options, but I understand that there's not a lot of people out there that have enough margin in their accounts to be able to sell options. But when you have jacked up VIX, high premiums, you definitely want to be a seller of premium, not a buyer. But you don't want to do that in a trending market either. You want to do that in a sideways market, which right now one could argue that the Dow is sideways on a year-to-date basis. Well, no, you can't really. You've made fresh yearly lows, so you're trending lower. And selling calls up there would be so far away from the money, you would literally be trying to stand in front of a steamroller to pick up a nickel. but they are high probable trades. That's why so many people do it. But this was in a very much in a year to date sideways market, because there's your year to date chart right there. So before that low was made, right there, you could have been a seller of options in this spread, but you would have only been wanting to do that for like a week, right? Tops. So you would be looking to sell 5 days out, 6 days out. You'd be looking to sell above 35 or 34.5 on the call side, and then on the put side, 32.8 here. And then you would collect the premiums as long as price stays in that range for that specific amount of time. High profitable strategy. You don't care if it goes up. You don't care if it goes down. You just don't want it to go above that or below that. Those are the best strategies to learn. And you can still manage risk because you can buy premium to finance the trade or sell premium to finance the trade. I mean, so you can actually sell calls and then buy puts if you're short, and vice versa if you're long. There's a lot of option strategies out there. And my goal, my plan eventually was to start to teach them. It's just, I have hard enough time getting people to learn just basic analysis. Just understanding how, what objectivity even is in the marketplace. Once you have objective levels, then you can base your strategy around those levels. So even though we got another lower close here, the last 15 minutes you've went nowhere up. I don't remember what this level is. So that's going to be hourly support until you close an hourly under it. So you have a very tight spread here, very tight operating range currently for the hourly time frame. And you just started the 10 o'clock candle. Is the IWM trending higher today, or is it going lower? It gapped up, but it is closing the gap, or aiming like it's going to close the gap. Doesn't really look like that on that intraday chart, though. Yeah, a lot of people are going to buy the banks, so I don't know if that would be good for Bitcoin or bad for Bitcoin, but I know when the banks were getting pummeled, Bitcoin was uber bullish. Just throw us a wick through there, please, so we can wrap this up. Kick the cat out. Yeah, you don't know my cat. My cat runs this joint. My cat is the king. That boy right there. That is the actual cat. That is a photograph of him. He runs stuff. A lot of people on Bloomberg and CNBC yesterday, they were talking about buying the banks, being, some of the stronger ones that didn't have, a high short float. Some of those were going to be buying opportunities. Your larger banks, Wells Fargo, Bank of America, stuff like that, the ones that got beat up. A lot of your smaller regionals were probably still going to take a hit. So those smaller regionals were in the IWM, as that is your small cap fund, if you will, or the overall. Let's see here. Where are we at year to date? Boom. So year to date, you're there. I've told many people all year this is going to be a very important level. People are going to make financial decisions and they're going to build positions in and around this area. Naturally, if price is trading above it, on retests of it, you will see people be buyers of it. Once you get under it and you get back into it, you will see people take selling positions based off of it. If they expect a trending market, of course. If they don't expect a trending market, then they're probably just doing bonds or just buying bonds. And we've seen that on the spike on the bonds. See here, there's your SPOOs. For 3 days now, you've been trading at or around your yearly opening range. Since you are off of the lows, there's your 2022 lows, also known as the bear market lows. You are still trending up. And Bitcoin is trading well above its yearly open. Well above. $10,000 above. But you're still trading inside of yesterday's range on the SPOOs. So it does look like yesterday's high will be the bullish target for today at the very minimum. So Bitcoin might not pull back until that happens, if it even happens. Very tight range. Oh, that's the wrong one. It don't matter. I can change it. Where is... It almost got up there, didn't it? It almost got up there. And yes, of course, you have a new gap there. We don't look for the gaps to fill, but they often do. So you still have 3 gaps on the chart. Still have 3 gaps on the chart. I mean, that's almost a beautiful touch of that old weekly close. Almost a perfect touch. 26,555.20. The high comes in at 26,553. So $2 off. $2 off. Still not doing anything. I thought for sure this thing would be done by now. That might be enough to squelch it. Let's see if it does. It does look like people are wanting it to. So now you would probably see the point of control building up. Let's see if it is. Not really. It is getting bigger, and it will the longer it trades sideways. You will get this volume node will grow because you're going to have more and more people trying to short it, and you're going to have people buying it, people taking profits there. Just you name it, they're going to be doing it. All right, I'll give it another 10 minutes or so. If it doesn't work out, I'll just move, you know what I mean? We'll close the stream down, and I'll just leave you with it's your choice what you do, right? You can either move your stop to break even and see what happens, or if you were willing to take the risk in the first place, just leave it alone. But you definitely want to make sure that you got your profit taking above that, because that's going to be the midpoint of that big hourly candle, this thing here. In 30 minutes, if you close above this, I would just scratch it. I would just scratch it. Because I also have a rule where if I take an entry and an hour goes by and it still price has not moved away from the entry, then I close the position anyway. Because the way I see it, if I'm going to be right, I technically want to see that thing play out quick, right? Like quick. I actually honestly thought that you were going to see it happen on this candle here. At least a wick down. But it's obviously so big. You got the FOMOers, man. The FOMOers, they want to buy it up, so they're gonna be buying up there. But I do expect a pullback. This is a big move that we've seen in the last few days. You've made fresh yearly highs. You've taken out that August high, which you already took out the August high over there. Fresh yearly highs. That's bullish. You pulled back to the 618 retracement of this move here. And that's where the buyers stepped right back up. Insane. These 3 days, I mean, it took how many days is this for the same size move? It took 3 days. Literally some crazy price action. Absolutely love the volatility when you're on the right side of the trade. Absolutely hate the volatility when you get stopped out and then it goes in your direction. That's even worse. When you take a loss and then you watch the trade work. Oh, talk about aggravation. That'll definitely aggravate the best of it. Because then you tell your stuff, you're like telling yourself, I knew it was going to go that way, even though there's no possible way you could have known that it was going to go that way. You just assumed it was, and it did, right? But the things we tell ourselves is we knew it was going to go that way. We can justify it even in our own brains as how we knew it was going to go that way, but we never really know. We can only assume. But let's see here. From that first 5 minute candle there, that was at 9:30. It's 10:30. So we're into this trade an hour and hasn't worked out yet. I would probably close it down. More than likely, it's either going to chop sideways. I mean, it could ultimately still roll over, but the real trade was the CME trade. Boom, boom. Or buy support, right? That was the trade. Those candles was the volatility. This is a 3% move, and it would be a nice move, but you could wait all day for that to happen. The S&P 500 is clearly trending to the upside today. I mean, and it's a beautiful trend. It's almost perfect. So I'm going to go ahead and wrap it up. You guys have been great. Just hang in there with me for Love Club. I promise you'll get it. You'll start to understand it. It will come to you. You will get it. There will be another buying opportunity. This still does not mean you've missed anything. I promise. I wouldn't be surprised if you don't get another chance to buy at 20K. I mean, you can go back and look at other times back after bear market ends were put in where you had these epic rallies and then massive pullbacks, right? Like, think about the people that missed this rally. And then this is what they got for the next, 4 months? And then Bitcoin lost 50% of its value again. Boom. So don't worry about it. We don't have the next halving until March 2024, and inflation is still high. So we're only expecting sideways markets this year. You're going to have plenty of opportunities to make money. They'll be tomorrow. We'll be looking for trades tomorrow. We'll be looking for trades Thursday, Friday. You're going to be fine. You guys have a fantastic rest of your day. I'll see you Thursday morning. Same place, same time. Well, probably a little bit later, unless there's news. I don't think there is. Let's see what we got here. We got PPI tomorrow, but I don't usually cover the retail sales or PPI. But that's going to be another big one to watch for volatility. And then Thursday, initial jobless claims, another big one to watch. So yeah, probably same time. We'll be at 8 o'clock. We'll see you then. Thank you so much for being here. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.